Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewiton, and Managing Director of International Content, Emily Parker. Good morning, Emily. Good morning, Lawrence.
Hey, good morning. How are you?
Great. Good to taking a look at good to see outside where I am. I'm in Puerto Rico, so if you're out here, give me a tweet.
Oh.
All right, taking a look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently trading at $56,792. Bitcoin is down about 3.7% over the past 24 hours. The CoinDesk Ether price ETX index is at $4,180. ETH is down about 2.4%. And then DFX, CoinDesk DeFi index right now at 563 points. It's actually advancing about 0.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So we're seeing a broader retreat in the crypto markets for our top cryptocurrencies, though DeFi, a bit of a slight advance. So what's going on with the markets, Lawrence?
There was a little bit of excitement after Chairman Powell was renominated or nominated again for another term by President Biden. And it seems, the narrative is at least that there was some profit taken right afterwards. That again could be part of it. It could be that people are like, all right, well, fine. They didn't pick somebody who was necessarily going to go too crazy on the money printer, but let's face it, that printer is going burr still, or had gone burr a lot under Chairman Powell. So I think this is after the fact has happened and they've sold the news, the fact. It's just at this point, just kind of like, okay, now what? And when you have a situation where it's like, now what? Yeah, it just kind of drifts down. But again, and I've warned
Tom Emmer, who we spoke to yesterday, seemed to suggest that they just want more of the same, more consistency.
Right.
Emily, what would that look like?
Exactly. There's no movement, and that just means inching down because you only have so many people who are going to buy again crypto. I mean, like at some point, it just like, all right, big deal. The only
What's interesting about it is that there was a different reaction between, the stock market really reacted quite strongly, at least initially, to this announcement. The crypto market, not so much. And I think that's because in crypto, the two are generally seen, the trace between Jerome Powell and Lael Brainard are seen as just not that different. There are some nuances, like which one would be more likely to promote a central bank digital currency, for example. But the crypto markets haven't really reacted to this news in any particular way.
Well, because it goes to this whole thing of like, are the crypto markets necessarily tied to macroeconomic data? And even though we like to think that it is, and we like to say, hey, it's very much related to interest rates, it's very much related to money printing, there are other factors happening in crypto so much that it's just sort of like, maybe we're kind of full of ourselves. Just saying.
Well, all right. Well, there's been a lot of investment in the space, and particularly what has gotten a lot of people attention is that soon the LA Lakers will be playing at Crypto.com Arena, thanks to a $700 million 20-year naming rights deal that appears to be the largest in sports history. Crypto.com's CRO token has been exploding over 70% over the past week since the news, up almost 1,000% year to date. And joining us now to discuss is Chris Marslick, CEO of Crypto.com. Hello there, Chris. Thanks for joining us. So, we reported here at CoinDesk that there was a $100 million advertising campaign launched by Crypto.com featuring Matt Damon, Fortune Favors the Brave, directed by an Oscar-winning cinematographer. Have there been immediate payoffs to this huge advertising campaign with now Crypto.com Arena and this ad campaign you've been running?
The short answer is that yes, we are seeing an uplift in the numbers. And it's quite surprising to me because generally speaking, brand advertising does not yield immediate results. We take a very long-term view, and we went out to the market with this campaign. We wanted to explain and share with the global audience what does the Crypto.com name stand for, what are our values, how do we see the world. But yeah, surprisingly, the results have been very positive. So I'm very happy to see that, that it resonates.
I guess, can you offer some detail? And have you heard of the stadium curse, this idea that big spending doesn't pay off, that it becomes a money pit, and that it's among the reasons that some old tech firms have gone under? So what can you say about some of the details about these payoffs in terms of user growth and dollar terms? Do you have any numbers?
Look, generally speaking, the platform grew about 20x this year in terms of revenues. So we've had a really strong year. The business is profitable, and it's been so for a number of quarters. So we thought this was just a great time to elevate our brand presence and increase the visibility on a global scale. Again, all these partnerships that we are signing are long-term 5, 10-year, 20-year deals. So we have a very strong positive outlook on the industry and where it's going. And specifically for the Staples deal, I think it was an excellent value for money. We've got tremendous global coverage. This is an iconic venue. You can't really compare it to any other stadium naming rights deal just because how special it is and how culturally relevant it is. We're super happy that we've got it done, and obviously there's a huge responsibility that comes with it, right? Because now that you've got your name on such an iconic place, you have to make sure that the fans are happy with it, that the local community is engaged properly. So we're hard at work. This is just the beginning.
So, Chris, is this necessarily the most efficient way to acquire for customer acquisition? I mean, is that taking away also from spending on your growth, on internal growth and internal developments and improvements? And also, is this a lot of pressure from FTX coming in now? Do you feel any of that heat? And that explain at least some of the reasons why we're seeing such a spend?
Look, the way we think about this is that we've got a product that people love. We've got a regulated, trusted, secure, and safe platform that people love to use. We've got solid revenues, so it's time to invest. We are not really outwardly focused. We focus on our mission, which is to take this industry mainstream, right? So this is aligned with what we stand for as a company. And again, the numbers look very strong. I couldn't be more happy with how things are unfolding this year, and it's not taking away in any shape or form from our investment in other areas.
Was it the most efficient way to do a customer acquisition?
Branding and customer acquisition are two different things. So we have specific things we are doing for customer acquisition and specific things we're doing for branding. You could think about it as 3 pillars, right? The first pillar is people need to see your brand. You need to have the brand visibility. The second pillar is people need to understand your values. What do you stand for, and is it something that they relate to, that they believe in? And the third thing is just tactical, growth in order to drive user metrics and convert people who engage with the brand into transacting users. So those are 3 different aspects, and I wouldn't mix them. They're different tools for different purposes.
So just to follow up on that question, how do you measure the success of an investment like this, right? Because it's so broad. If you have, for example, like an affiliate link, it's like, okay, this many people went through this link to sign on to the exchange, right? You can really easily measure the cause and effect. But how do you measure this, right? How do you measure how many people, saw this name, went to the stadium, and then actually became a user? Right? It's what kind of metrics could you use in this?
Well, there are ways to measure brand awareness and aided, unaided. You can run surveys before and after the campaign to see what kind of uplift you're getting. You can look at the percentage of your organic traffic and organic user acquisition and see how that is evolving over time. So there's a number of ways of measuring it. In the end, given how expensive other advertising channels are today, I think this type of investment is going to have fantastic ROI, and you could see it by the coverage. This was covered by Wall Street Journal, New York Times, Financial Times, all the late night shows in the US were talking about it. People are really engaged. So, and this is probably the first time that the market is starting to wake up to the scale of what our team have built over the last 5 years. So I think it was the right move at the right time.
Looking ahead
my friends in LA I was going to say my friends in LA call it the crypt now. But that said, is there any geographic strategy to what you're doing? Of course, I as a big fan of the Habs tickets haven't come in yet. I'm just letting you know. But is there a geographic? Is there any geographic strategy? You have LA, you have Montreal, you have Europe. Where are you exactly picking these locations for your naming rights and things and advertising?
Look, this kind of reflects our overall geographical distribution of the business, right? It's the US is our single largest market today. Europe is, as a whole, is quite big. It's probably a third of the business. So you'll see we're cutting deals where our customers are, and obviously after we picked off some of these main properties that were on our to-do list, we will selectively start going regional and then eventually local in different places around the world.
Yeah, just building off of that, Chris, I was just wondering, looking ahead to 2022, what's the plan for expansion and growth at Crypto.com?
Well, we are still not the largest retail platform globally yet, but the team is working hard on addressing this. And we've got solid plans across the core trading business, the payments vertical, and blockchain gaming. We think it's going to be huge next year. I think all industry players, including Crypto.com, are going to still benefit from very strong tailwinds. We estimate that the industry is going to cross 1 billion users globally next year. So it's going to be a fun time for sure. We're very excited about next year, and the roadmap is already fully packed.
All right, Chris, thank you so much for your time. I appreciate your insights. Congratulations on this deal. Very fun to watch Matt Damon on the television screen pumping
Thanks
crypto.
So much for having
thanks
me.
for joining us. That was Crypto.com CEO Chris Marslick. Coming up, checking in on Asia and crypto markets, update with independent research firm Fairlead Strategies. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, November 23rd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, Hong Kong's South China Morning Post newspaper has released a white paper on tokenizing history, alongside announcing a debut NFT collection from its archives. We're going to take a look at how the past could help shape the future of news, and a whole lot more coming up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories coming out of Asia today. First up, police in China's Inner Mongolia region have busted another ECNY fraud case, with one suspect arrested in what appears to be a telescam involving a total of 8 million yuan. That's 1.25 million US dollars. Over in Korea, the country's Financial Services Commission says NFTs will be taxed from next year, contradicting what the finance minister said just last month. The FSC's vice chairman has now said that current regulations overseeing virtual assets can encompass NFTs as well, with the finance ministry preparing to tax them. However, the full scope of that tax is yet to be defined. It's a really interesting story and set of developments coming out of South Korea. You can find more at forecast.news. Meanwhile, Hong Kong-based newspaper The South China Morning Post, or SCMP, is aiming to set a standard for recording history on the blockchain. In a newly published white paper, the SCMP says factual accounts of events should be immutable and ownership of them should be decentralized. But what could such a project actually mean for the future of media? Forecast News' Carolyn Wright reports.
With its Artifact project, the 118-year-old newspaper says it aims to tokenize historic news reports with assets including everything from single news stories and photos to whole front pages. The white paper outlines how the project aims to set a metadata standard, with its structure to be developed by an international committee of interdisciplinary experts. Artifact will be governed by a non-profit foundation which will look to get museums, publishers, universities and more involved. The first Artifacts by SCMP collection covers events from 1997, the year of Hong Kong's handover from the UK to China. SCMP has partnered with Dapper Labs, the company behind the hot-selling NBA Top Shot video collection, to build the artifacts on its Flow blockchain. For Forecast News, I'm Carolyn Wright.
And now for the DeFi download. In this decentralized world of finance, we dive into what's top of mind as you make your way through it. The goal, to avoid those hidden dangers. And this week, we are talking about illiquid assets and how to price it. Could DeFi be one way? Well, one man who can help break it down is David Lighton, co-founder of Lithium Finance. It's good to see you, David.
Hey, Angie. Great to be here with you. Thank you.
All right, let's kick off with the big question of how do you figure out the right price for an asset? Now, in the news earlier this month, real estate info company Zillow pulled out of house flipping market because of the unpredictability of forecasting home prices. Now, if they can't do it, how's everybody else supposed to? And extending that thought to crypto assets like NFTs, what's the takeaway for digital assets? How do we think about pricing here?
In every industry, from hedge funds up until the recent experience with Zillow, we've had a lot of very smart people building very technical, very elegant mathematical models on valuation that are driven by fundamentals. But despite how clever and sophisticated their models are, they happen to be wrong. And the reason that they're wrong is that they're too driven by fundamentals data.
So where does DeFi fit into all of this?
Well, DeFi fits in the broadest sense in a way that people could start to trade more assets on chain if they were able to price them. DeFi can enable more peer-to-peer commerce, right? And that's really the revolution of Web3, right? We want to eliminate all of these verifiers, guarantors, financial institutions from the flow, from the exchange of goods and services, because we don't really need them, right?
Thanks for the DeFi download, David. That was David Lighton, co-founder at Lithium Finance. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm editor-in-chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is trading downward at $56,788. Bitcoin down almost 3% over the past 24 hours. The CoinDesk Ether price ETX index is at $4,199. ETH is down about 2%. And taking a look at the new DFX CoinDesk DeFi index is at 563 points. DeFi, however, is by contrast and making advance about 0.6%. Joining us now to discuss the crypto markets is Katie Stockton, technical analyst at Fairlead Strategies, an independent research provider. Hi there, Katie. Always a pleasure having you on. So we're seeing Bitcoin declining amid broader markets retreat in the crypto markets. What's behind the dip?
Well, we have had a risk-off tape for cryptocurrencies, broadly speaking, for more than just a week, really over the last 2 to 3 weeks. And with that, we have a very significant pullback that we've seen in Bitcoin, for one, of about 20%. Now, that's, of course, not impossible. There's a lot of volatility inherent to this space. And believe it or not, that even with that kind of decline, Bitcoin still remains above key support, which we are looking at just shy of 53,000. That's based in part on the September high. We often see former resistance on a chart become support going forward. So that's important to note that we still have support intact. And importantly, the pullback has generated a short-term oversold reading. That is a measurable factor from a technical perspective. And as of today, we have a short-term exhaustive signal from something called the DeMark indicators, which have been helpful to us in identifying inflection points. The last time we had this similar signal was in June for Bitcoin. And it's not to say we're in store for that kind of reversal because it doesn't follow a big decline of that nature, but it does suggest that this pullback is likely to mature within days.
Katie, just one kind of larger question for a moment. So yesterday we got the news about Jerome Powell continuing on as Fed chair. We did see some reaction from the market, from the stock market. Did not seem to see a reaction from the crypto market, but I'm just curious if you have any take on that, on the market's reaction, and if you expect crypto markets to respond to this in any particular way going forward.
It's really hard to say. I mean, I just look at price in the charts. So there was certainly a reaction yesterday from the equity market that was pronounced into the close. And yet we're seeing some pretty firm action this morning in the futures. So I don't think it will be a major impact. The market is very strong as far as the S&P 500 goes, and it'd be unusual not to see some kind of minor pullback with that kind of news. So I think it was just a normal reaction. I don't think it will be long-lived. And because the cryptocurrency space had already pulled back pretty dramatically, it was less affected and probably will remain that way. So I think it's probably not going to be a major impact going forward, and we should just respect the indicators and the momentum, which on a short-term basis is still to the downside, but with just a very minor uptick, meaning we get maybe 2 days of stabilization, we'll start to see those short-term gauges turn up. So we moved yesterday in our report covering Bitcoin and Ether to a bullish short-term bias after having been on the sidelines for a bit, because we're comfortable with that oversold reading as an impetus for the intermediate term uptrend to resume.
So, Katie, I kind of want to look at that chart you had of Bitcoin. We just showed it a second ago. You do see kind of, we're getting close to that support level, but then you have like an 89,000 long-term target if we were able to bounce off of it. I guess my question is, at what point do you change that, though? At what point does price have to go down for us to say, you know what, maybe that 89 target is a little too out of reach?
The 89, or it's really closer to 90,000 target, would be derived from a confirmed breakout to new highs, which Bitcoin does not have that yet. Ether does. So I think that bodes well for Bitcoin ultimately doing the same, especially if we see this reaction that should occur to the short-term oversold reading. A non-reaction, meaning we see downside follow through to that oversold reading, would be a setback for short. It's hard to say what the exact level at which things change, but certainly below 53,000, you would see a couple of sort of support levels that we'd be uncomfortable seeing taken out. And that would potentially damage the intermediate term uptrend, which still has the support of intermediate term gauges, things like the weekly MACD indicator, which is a popular technical tool. So it's really more than just a level. It's these indicators that we want to keep on our side. And that MACD indicator, for one, remains on a bias signal supportive of that intermediate term uptrend. So if that changed, we would take issue with that, but it's not happening at this time.
And I think we're looking at now the Ether chart that you were talking about, and you say that this bodes bullish for ETH as well, and that actually would help Bitcoin, correct?
I think it just shows sort of a good example for Bitcoin in terms of confirming its breakout. So Ether did clear final resistance, posted the 2 consecutive weekly closes above that level, which is what we require for confirmation. And that then allows for a measured move projection of about 6,000. That's assuming the trajectory of the current trend will maintain itself. And support right around 4,000 remains very much intact for Ether as well. So you're getting these short-term oversold readings above support. And I think that that's an important takeaway. So really just one kind of sets a good example for the other. The altcoins have underperformed to some degree recently, and that's not uncharacteristic of a risk-off type of tape. When you see risk come back onto the space, you tend to see the altcoins outperform.
Yeah, we
Right.
also have those altcoins. We have that chart you did, an animated version, I guess. So you see them all moving in the long term or intermediate term to 12 weeks. If we look at a 12-week average and then also a 10-day average, you see them in both situations underperforming Bitcoin. Is that correct?
Yeah, they have underperformed over both of those time horizons. Now, that RRG or relative rotation graph that's pictured shows normalized relative strength for each of those altcoins relative to Bitcoin. So if you see a trailing history behind that's pointing down and to the left, well, that means it's underperformed with growing momentum. So what you want to see is something pointing up and to the right. And really, it has only been Polkadot, and that's getting a little bit long in the tooth in terms of its outperformance. But the graph actually upholds this clockwise rotation that would suggest that the altcoins within the coming weeks should start to outperform again, because a lot of them are just starting to tick up, meaning that they've lost some downside momentum in relative terms.
Very cool charts. All right, Katie, appreciate your insights. Love the technical analysis. Thanks for joining us. That was Fairlead Strategies technical analyst Katie Stockton. Coming up, Austrian crypto exchange Bitpanda, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So we're heading into the Thanksgiving holidays. Any news out of DC?
Good morning. It so far looks to be a pretty quiet week, hopefully. We did get the preview of what the House Financial Services Committee is going to be looking at over the next months. And in just a little over 2 weeks, there will be a hearing on crypto. And my understanding is that it will feature a number of CEOs from different crypto exchanges, although details, at least at this point, are still a little TBD. Apart from that, hopefully it'll be a quiet holiday to end this crazy year.
Nick, we had you on the show yesterday, right after the news broke about Jerome Powell. Just curious, since that happened, any interesting reactions from the crypto industry? It seems like not much of a reaction. That's my impression. But anything in particular, or people just kind of this is, more of the same?
A lot of the sentiment does seem to be that this is more of the same. The biggest issue people are kind of talking about is inflation. And, there's an ongoing debate about whether this inflation is temporary or not. And, many credit or blame Powell for his actions during the pandemic as, a key instigator of current inflation. So, so far it does kind of seem to be, people are just expecting, this is either a validation of Bitcoin as an inflation hedge, or, if you have your preconceived, opinions, doesn't look like those have changed much.
Nick, do you think there would have been a big difference for crypto if Lael Brainard had actually become the Fed chair?
It's hard to say. So while Brainard has spoken out about central bank digital currencies quite often, and even appeared on at Consensus this year to talk about the digital dollar and crypto in general, she hasn't said a whole lot about how specifically she might approach crypto regulations from a bank supervision perspective. And it's hard to say how she might, what sort of impact she might have on the industry as a whole. But the fact remains that, she has spoken about CBDCs and crypto quite, specifically at large over the last 2 or 3 years. So at the very least, she would be extremely knowledgeable in this area, which is something that we're seeing more and more amongst regulators in the U.S. this year.
Hey, we saw President Biden's releasing some of the oil out of the strategic reserve. Is that signal at least anything in terms of this fear about inflation being a serious problem, at least right before the Thanksgiving weekend? Was that more of a political move, or was there any thought behind it?
I'm sure it seems probably more of a political move than anything. The U.S. is currently looking to other nations to increase their oil output, including a consortium of some of the, I think, Far East nations that are involved in oil production, as well as trying to lean on Saudi Arabia. Whether that's going to have an impact on prices and inflation is beyond me.
All right, Nick, thanks for the update. I just got your newsletter in my inbox, so I'll have to be sure to be reading up on all that's going on the state of crypto. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Heading over to Europe, Austrian crypto exchange Bitpanda has been expanding its presence through the continent with a mission to bring digital assets into mainstream adoption. So what are some of the roadblocks in more crypto-friendly jurisdictions? Joining us now to discuss is Bitpanda Chief Product Officer, Lucas Ettersdorfer. Welcome, Lucas. So the latest news is that Bitpanda is partnering with French mobile payments app Lydia to offer their 170 digital currencies. Maybe you can weigh in on France's regulatory reception to crypto compared to other EU countries.
Yes, I can hear you. Hi. Hi, everyone. Great to be here today.
Sorry about that. My Wi-Fi went off, but so Bitpanda has been partnering with French mobile payments app Lydia to offer their 5.5 million users the ability to invest in over 170 digital currencies. So maybe you can weigh in on France's regulatory reception to crypto compared to, say, other EU countries.
Yes, for sure. So first of all, great to be here today, and thanks for having me. I think the important topic to understand is that we at Bitpanda, since day one, since we were founded in 2014, are striving strongly for being fully regulated by all different European countries, and also as part of that in France by the French AMF. When the French crypto law, the AML5D adoption came into place in 2020, we were the first foreign non-French crypto company being fully regulated under it, right? And for us now, partnering up with Lydia, the largest local neobank and payment super app here in France, it's for us really to bring about our really easy to use and simple and convenient trading services for crypto, as well as for other assets, to Lydia's users and customers.
Mm-hmm. And I suppose, why France compared to other countries?
From a crypto regulation perspective, you mean?
Yes.
Mainly you can see that the AMF is quite open to crypto companies as long, and I think that's the essence out of all different European regulators, as long as you follow the rules and the laws. And therefore we are in quite close contact with the local regulators to fully comply with all these different regulations in the cryptos world, but also on the other side, for sure, in the existing traditional financial service industry laws, which are part of that, especially in Europe. So very, very open, and we are in quite good collaboration with the local authorities.
So the U.S. has really been kind of dominating the crypto regulatory news cycle lately. Can you just give us a snapshot of how Europe compares to the U.S. in terms of regulatory friendliness toward crypto?
Yes, for sure. I think the important part here to understand is that European regulation is still quite fragmented, right? So there is no EU law simply regulating a harmonized market for crypto. So it's about obtaining a license in each country. And we as Bitpanda exactly have done that and are in the process of doing it with the last European countries to be fully compliant with all our services in all of these countries. But it's also super important to do that, because otherwise, and I think that's also then the downside of Europe, if you're not compliant in one country, you simply cannot offer your services to these customers. And that's super important, therefore, for us, as we are, as I said, super secure and compliant with these laws, to be regulated by each of these entities in each country. For example, France, Austria, and also others.
Well, that actually sounds similar to the US in the sense that US regulation is very fragmented state by state. There's not really this one US regulatory environment. So I guess Europe and the US share that in common. I'm curious about the state of DeFi in Europe. So at one point, Chainalysis came out with this, basically saying that, Western Europe was the center of DeFi, but then they also kind of say that the US is the center of DeFi. How does DeFi compare in Europe and the US? Because it seems like there's quite a lot of capital flowing into DeFi in Europe.
Yes, for sure. So I think the main topic here is that DeFi in Europe is growing in adoption and getting stronger and stronger as part of that. Independently of that, DeFi is not yet part of existing regulation. So I think there is a lot of regulation coming up in that regards, but not fully regulated yet, I would say, independently of Chainalysis and so on.
Lucas, I think a lot of your friends are seeing you right now and they're calling, apparently. But
yeah, it looks like. I'm super sorry. I just turned it off.
So we've been looking at this right now from the point of view of the regulators, and the regulations. But what countries, in terms of the customer base, what countries would you say are the most friendly right now to crypto adoption? Obviously you're expanding into France. How would, for instance, the French market relate to crypto relative to other countries? Are they more friendly, et cetera? And which ones are the most friendly? Which are the ones that you think where crypto hasn't really taken hold of the consumers just yet?
Yeah, I think if you look in general in Europe, you have to consider that Europeans are not that used to invest in general, right? Especially if you compare it to the US or the UK. So continental Europe, people are not used to invest and therefore also not that much into crypto. But crypto adoption is a super strong driver for investing into assets in Europe quite strongly, right? So in the end, a lot of people starting to invest in crypto. And what we've seen is, friend, it doesn't matter if it's in Spain, in Italy, in France, in Austria, in Germany, and also other markets, that people get more and more into that space and quite fascinating. And that crypto adoption is quite correlated also in Europe with investment adoption as part of that. And I think this is also quite important to understand that our white label solution is exactly that partnership of bringing our trading services to other partners in Europe who already are in these countries, who are neobanks, payment apps, and also traditional banks who are quite eager to offer crypto trading to their customers, retail customers who already are and getting more and more interested into exactly getting engaged into crypto, getting invested, and use the applications within the crypto space quite strongly. And you can see that throughout all different countries in Europe, I would say. So it's not that you have a country where they are super slow versus some others are already quite strong. That's quite even distributed, I would say, throughout the population in Europe.
You wouldn't say that one is more competitive than the other. And I say this, looking at Binance, they've recently registered a fourth legal entity in Ireland. They kind of flirted with the idea with France. Is there competition among countries to, attract crypto companies into their firms? Is there competition, and who are the most competitive?
I think the important topic to understand is that each regulator is taking it from his or her point of view. To a certain degree, you have Germany with already quite advanced laws from a regulatory perspective. And then you have other countries, Poland, for example, which even until a couple of weeks did not have a law in general for handling crypto companies. So if you as a crypto company in Europe think about where to locate or where to be placed, it's not a question of what is the best place. It's simply a question of how can you comply in each country with the local laws and regulations. And you see that, as you mentioned, also with other crypto companies thinking about how to enter Europe. We at Bitpanda, and I think this is simply our biggest advantage, we started already 7 years ago. with being fully compliant freedomly to local regulations, which were then still not applicable in the crypto space, but in the financial service industry. So therefore, I think one of our strengths definitely is that, as I said, we are super regulated, we're super easy to use, and you can use us from more or less each European country as part of that, independently of how strict the local regulations are already or not.
Get as many licenses as possible, divide and conquer seems to be the strategy. Lucas, thank you so much for joining us. Appreciate your time. That was Bitpanda Chief Product Officer Lucas Enzerdorfer-Conrad. Let's check in on crypto Twitter with our tweet of the day. And this one is from Spencer Schiff, the son of Peter Schiff, a notorious gold bug who doesn't like Bitcoin, tweeting, in the war against fiat money, Bitcoin's proponents and gold's proponents are on the same side. However, the actual assets compete against each other for monetary primacy. Bitcoin will win that battle. Should be an interesting Thanksgiving family dinner coming up this weekend. All right.
Yeah,
that's
well, the grandfather's not
First
around
Mover.
there, so.
Yeah. All right. Thank you, Lord Lieutenant Evelyn Parker. Oh, dear. Well, Mad Hatters, good time. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin coming up at noon is the hash. You're watching CoinDesk TV.